Hey traders, welcome to another global macro update. We're going to be going over mainly the commodities today, but we will touch on some currencies as well as the equities market in the United States because we're definitely seeing the sentiment switch into more of a risk on environment where we're seeing more of the higher interest rate yielded currencies have more demand as people get out of the US dollar and into these currencies like the Turkish lira, the South African rand, the Mexican peso that have higher interest and will provide investors with more cash flow basically. So first things first, let's look at the economic calendar. We got some U.S. consumer confidence numbers, which actually came out surprisingly well. It was forecasted at 88, so it came out a little bit lower than the forecast, but I personally thought that their forecast was a little optimistic, and it didn't actually turn out to be that bad. We'll look at that, and then we also saw some new home sales absolutely demolish the forecast. The forecast was just under 500,000, and then the actual number came out to 623. So first thing we're going to look at is the U.S. Conference Board consumer confidence. So the first thing we're going to look at the longer term time frame. Let's go all the way back to the max. We see 2009, kind of the worst part of the financial crisis. Just over a decade ago, we see that it went all the way down to in the 20s. But we see right now the U.S. consumer is not really phased yet. We're in the mid 80s still, which is, in my opinion, pretty surprising. So the U.S. consumer, the backbone of the United States, is still confident, strong that the United States will come out of this without a problem. And we're definitely seeing that within the markets today. Next thing we're going to look at is the new home sales. We do see that it was a lot better than the forecast. Previous was not terrible either. We see that in the low of the financial crisis, we went all the way to in the sub 300,000s, and we're not really getting too severe of a drop yet. Living in the lower mainland in British Columbia, there's definitely houses still for sale and are selling, so it's not completely locked down yet in terms of the real estate market. So definitely not as bad as it seems in terms of how much worse it was, let's say, a month ago when these numbers were absolutely unbelievable, the drops. But now we're getting some consolidation, so we can see the numbers here. We're consolidating, let's say, around 126 to 130, and then now we currently are stabilizing around, let's say, mid 80s. So obviously with the risk on environment, with people speculating, with things looking like they're opening up, people's confidence are slowly coming back. Investors are looking to take a little bit more risk to potentially get more of a reward because they think that the optimism and the positivity is going to continue in the future. So let's now look at some charts here to kind of get a look at what's happening within the financial market. So let's first look at the US dollar. It dipped even lower here, consolidating, continuing its range from around 101 to around 80 or 98. I do see a bit of a squeeze, making lower highs and higher lows. But overall, the US dollar did dip today and basically dipped yesterday quite a bit as well, or the past weekish. We made a little bit of a pump, but overall, we're not really moving much in a slow downtrend within the past week. And this can be shown in the FX markets where you're seeing people go back into higher interest rate currencies like the Mexican peso, Turkish lira, and South African rand. So let's look at some currencies here really quickly. This is the Mexican peso, and let's quickly pull up some economic information regarding global interest rates because this is going to give you an understanding of the yield that is getting or that you can receive if you hold the Mexican peso currency versus the Canadian dollar in terms of treasuries, which is basically controlled by interest rates here. So we can see this is the Mexican peso. So if we get our central bank's interest rate and look for the Mexican peso, it's at 5.5, whereas the United States is at 0.25%. And we can see other places like South Africa 3.75 and Turkey 8.25. So we can see these emerging markets have higher rates and higher yields compared to the US dollar. So if there's a risk on environment, meaning people are optimistic and, there's less of a worry about a pandemic, of lockdowns, of major consequences due to those lockdowns, you're going to have people chase those higher yields. And we're seeing that right now with the Mexican peso that has a higher yield. We see the South African rand have a higher yield, breaking supports. Surprisingly, it broke the 17.8 support, and now we're breaking even our descending levels. So it does definitely look like we are coming back, and investors are rushing back to these higher yielding investments or instruments. And the Turkish lira, even that moved to the downside, breaking its support of around 6.75. It's at around 6.72, falling, breaking this nice little level of support. Now let's look at the indexes. Dow Jones broke its recent high of around 24,737-ish, and then it now touched, I think, 25,000. Yeah, it did today. So it's definitely a big move on the Dow Jones today. It gapped up and then is holding that high. It did retrace back from the high of the day, looking like it's around 50%, but overall it did close higher than the open on a gap up, which is pretty significant. Also, the SPX made a real significant break to the upside, breaking its around 29,000 key level of resistance, and it actually hit 3,000, which is a very significant zone for the SPX. Hasn't hit it since very early March, right around there. March 5th was the last time we hit that zone at 3,000. So it does look like we're slowly creeping up. After the break of this descending zone, we need to talk about a potential move to the upside. I'm still a little bit hesitant. I'd rather look at precious metals, which we will talk about in this video shortly. But that's the indexes as well as some FX markets, understanding that this is more of a risk-on environment. People are getting away from the US dollar and putting their funds towards higher yielding instruments in the FX markets, as well as putting their money in the indexes, like we can see in the SPX, Dow Jones, as well as the NASDAQ, and majority of the indexes are up as well. Now we're going to look at some commodities, mainly just gold and silver. Let's open up gold, and then let's get right into the price action here, quickly opening this up. And then let's just talk about it here. So we had that massive triangle, not huge, but pretty large triangle we can see right here. And we're now holding a key zone of support, both from this descending zone, creating a new level of support. It was also the previous support adding on to the demand zone. So we have a key level of confluence at around the $1,700 level, which is also a psychological level that we do have to consider. And then we also see finally resistance turning into support, 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 support. So we have a lot of support around that $1,700 zone. And what's also really nice is we're creating a nice descending trend line with lower high or high, lower high, lower high, lower high, and we have a very nice squeeze here where we have a very valid zone at $1,700-ish for a key level of demand, with a squeeze with a resistance pushing the price down, making lower highs. So right now, I do see a pretty significant squeeze on gold. If we are able to get the demand to come back and the bulls to push the price above this key level of resistance, and we're able to validate maybe this zone for a new level of support yet again, that, in my opinion, is an extremely bullish opportunity, and this would just be a major pullback. So this, in my opinion, let's just take off some of the stuff to make it a little less hard to understand. So this initial push was the impulse move, and then the wedge that we're currently seeing is the consolidation or the contraction of volatility before the next expansion in volatility, potentially hitting the next key level of supply at around 1800 to 1785. So that's going to be the overall analysis. I really hope you're able to break this resistance zone. That would be the initial trigger for the trade for gold, is if we're able to hold this support and then get above this key level of resistance and then hold this new level of support, because we're probably going to get some level of pullback after breaking this down. Every push does have to have a pullback after every breath. It's like you gotta You got to breathe and you got to inhale and then exhale, and that's how the market moves. It's not going to be absolutely perfect from point A to point B in an absolute straight line. That's not how it works. You got to give it room, you got to give it patience, and that's how you kind of maintain your bias while being flexible. So that's going to be the overall analysis for gold. Let's now jump right into the gold and silver ratio, and then we'll look at gold, because obviously understanding gold and silver ratio is pretty key in understanding these two precious metals. So we are moving back to the downside. We got these two wicks trying to go back to the upside, but the ratio is saying no, we want to keep on going down to test our major structural support. We can see on the weekly, this is a major ascending wedge with a huge blow off top, and we are getting that retracement back down to the demand zone where we're getting our confluence right here. So in my opinion, the momentum is still very to the downside on this ratio, which means it's more bullish for silver than it is gold. It doesn't mean that it's bearish for gold. It could be it's bullish for both precious metals, but silver is just appreciating at a quicker rate compared to gold. That could be the situation that is occurring, and that's exactly what we got within our first breakdown of around 109. We got silver to be on a rocket. While gold was chugging along, making higher highs and higher lows, silver was on an absolute rocket to the moon, and we did stop at a key level of resistance, but that was a very strong push that we had from silver. Now going on to the smaller time frame of this gold and silver ratio, it does look like we are able to hold that $100 level of support, which is a previous resistance, also a psychological zone. What does this ratio mean? You can, for 100 ounces of silver, buy 1 ounce of gold, and this is what that ratio is telling you. If we are able to hold this around 100 level of support, I expect it to consolidate a little bit further, but if we start to see this drop off and we see a large time frame like the 12-hour or daily close very well below this $100 range for support, I would definitely expect it to kind of close that gap and hit our previous resistance, which is going to be our new level of support within the gold and silver ratio. Now we're going to jump right into silver. Let's talk about this second precious metal. And let's take it back to the 12-hour, discuss what happened, discuss what we could see within kind of the next couple days here. So let's get our snip and then discuss what happened. So first things first, we had that massive liquidation event that hit all asset classes, gold, silver, indexes across the globe, cryptocurrencies, and then we got a pretty sharp recovery. We can see right here, making some higher highs and higher lows, and then we got a consolidation with a series of lower highs and lower lows, contracting the volatility in a tighter, narrow funnel, and then we got to move to the upside, validated that there's a lot of buyers within this new level of support, key previous level of resistance as seen, and then this was that massive boom that we had that was strapped onto the rocket, and then we hit that 17.5 key level of resistance, and we're currently right now creating an ascending triangle to that key level of resistance. So we see a key level of resistance at 17.5, and then we see a low, higher low, higher low, higher low. So we are creating a nice ascending triangle pattern. Now if it does break to the upside and we're able to break above this 17.5 key level of resistance, that's definitely bullish in my personal view. We'd probably see the gold and silver ratio go down, which is bullish for silver. So that's one option. But if we break this ascending zone to the downside, I am going to look at this. So if we break this ascending zone to the downside, I'm still going to be looking for some level of support to hold, and then I'm going to be looking for some level of a descending zone, which we could be looking for a squeeze. That's still going to be looking for a bullish opportunity. So I'm personally not really bearish on precious metals, to be completely honest. I'm not a perma bull, but I do expect the precious metals to go higher due to the global macro fundamental factors that are in play. Obviously, with the currencies around the world kind of getting debased pretty quickly, with central banks printing a lot of money, and with very low interest rates, there's a lot of free money or cheap money, so then that money is going to go somewhere. If there's worry of economic turmoil, usually the money is going to go into safe haven assets if there is definitely a worry of any kind of too much money printing and all that stuff. I'm just pretty bullish on gold and silver for the fundamental factors as well as the technicals. So that's going to be my view of silver. Let's go on the smaller time frames after the 12 hours. Let's go maybe on the 2 hour. I think it's a good time frame to be looking at this chart. All right, and let's take a picture right here. So we really would like to see this current support hold. We see that that's the initial anchor point, and then we see 1, 2, 3 points where we see the ascending support of silver hold, bouncing the price back into the pattern, which is the resistance right here, and this ascending level of support. So ideally, in a perfect world, if we do get a nice clean breakout from this price action pattern, we get the price to bounce off this key level of support, maybe get one more retracement to the downside, but inevitably we're looking to see the price break and hold above this 17.5 level of resistance. We could get some pullbacks. I totally don't mind. We could get a wick with a candle closure above, which is a bullish engulfing candle. We do want to leave room for that in case it does happen for our stop loss, but at the end of the day, if it does break and hold above the 17.5 on a large time frame, we're talking 4 hour, 6 hour, 12 hour daily, something like that, that would definitely indicate that we would have a higher confidence in the price moving back to the upside. Could be a fake out. That happens where you get a move to the upside and then you get an instant smash down where it is a fake out. That does happen, and then if that is the case, that's definitely telling you that there's seller pressure in the market where you could get some sellers, but you got to go with the price action and you got to understand risk reward. If your risk reward is 3 to 1 to the upside, you don't make it, and then your risk reward is 3 to 1 to the downside and you do make it, you're still up significantly. So understanding risk reward and that relationship between win-loss is pretty important as well. So other than that, I'm not really going to draw anything like that unless we get one more touch like here. Then it might be a somewhat of a symmetrical where you get something like this, where you get a series of lower highs steadily and then some higher lows. That could be a nice squeeze. That would be a potential breakup to the upside. That would be something that I would trade as well, which would be a continuation pattern to get you up to the next key level of resistance at around 18.5. So that's analysis for the precious metals in my personal view. If we do break this ascending zone, this horizontal zone is still in play for a continuation horizontally, so it'd just be a consolidation sideways, and this key level of supply is around 16,875, somewhere around there. That's going to be the major level that I'd like to see the price hold if we do break that ascending level of support. But in a perfect world, I'd like to see it break this minor level of resistance at 17.2, hold that ascending level of support, come back, get one more retest potentially to validate that price level even more, and then move and get that demand to push the price above our key level of resistance at 17.5. So that's going to be the overall analysis. Not really going to be short bias for gold and silver, to be completely honest. I'm going to be a little bit more long bias due to fundamentals, and we'll see how it goes. Not going to be trading anything just yet, but obviously we do have to have patience in the pattern to actually fully develop before we do actually take any action. So thank you very much for watching. Hopefully you enjoyed it. If you found it useful, educational, entertaining, it'd be great if you do subscribe to our channel. Helps us out, and if you give it a thumbs up, you know that you liked the content. If you have any suggestions in improving it, if you have any suggestions in things that we could cover more frequently or cover that we don't cover right now, definitely put it in the comments and we'll be sure to read it and incorporate it within our videos in the future. We do offer this as a YouTube live, meaning if you have questions live while we are going through this, you can definitely ask them in the questions within that live description box, and then we'll be able to go over at the end of the video. So I'll cut off the recording right now, but I will go over the the YouTube live comments and then answer them if there are any. So thank you very much for watching. We appreciate the view, and until next time, have a good one.